Major stock market indices are down roughly 3% today, again, as President Donald Trump intensifies the pressure on central bank chair Jerome Powell to decrease interest rates. And so, because of all this extra stock market volatility in recent weeks, I've had a lot of questions from channel members asking me to do a broader macroeconomic video discussing the stock market and what I'm doing in response to this volatility. So I'll share some of my actions in recent weeks and recent months in how I'm dealing with this increased volatility.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, in general, I try not to make major changes from my strategy as a result of current economic conditions. I have a set out plan where every few weeks I add to my investment portfolio. I add to some of the stocks that I like, some of the stocks that I've had rated as a buy, some of the stocks that I have on my watch list. And then sometimes on the margin, I might delay some purchases and build up cash when I feel markets are overheated. And sometimes I might accelerate some purchases and buy double or a little bit more than I normally would when I feel stock markets are undervalued. So let me zoom back to around October of 2024 when stock markets really became excited about the potential of President Donald Trump and a Republican sweep of the US government. And stock markets really started soaring in October, November, December, and January. In those months, I paused or delayed some of my purchases of some stocks as I felt that stock market investors and some stocks specifically were getting a little bit ahead of themselves, a little bit too much enthusiasm, a little bit too much excitement for the incoming administration before any action had been taken. And so I kind of paused and delayed a little bit. Now, fast forward to, let's say, about a month ago when the threats of tariffs really started to impact stock markets and prices started to come down. I have accelerated some purchases. So, about a month ago, I bought, as I shared with you all, I bought Uber shares. Uber stock has been rated as my top stock to buy here in 2025. And I found an opportunity to add shares of Uber to my portfolio about a month ago. And unfortunately, just as I was about to record this video, I saw reports coming out that Uber is being sued by the FTC on speculation that it was charging members for its Uber One and it might have to pay a fine as a result of that. I'm going to dig deeper into that after I record this video, but it didn't look too alarming to me in terms of my evaluation of Uber as a long term beneficiary of these trends and a business that's under a very good management team. And so I've found an opportunity to buy a quality business during this stock market volatility at what I felt was a bargain price. I believe I bought Uber shares in the high $60 range, $68 or $71, something around that price is where I got Uber shares, which felt like a bargain to me. And then a few weeks ago, again, something that I reported to you all, I bought shares of Nvidia stock in the low $90 range. Nvidia has been on my list of one of the top stocks to buy for 2 years now. I had it on my list in 2024. It did really well in 2024. I had it on my list again in 2025, and it's done not as well in 2025. And so I was able to add shares to my portfolio in what I felt again were bargain prices for Nvidia stock. Now, there are many, many bargains, in my opinion, right now in the market. And I have many stocks on my list that, if you've been following my channel, you know I keep a list and I update the list with the ratings of buy, hold, or a sell. And, I do the discounted cash flow valuations. And so I have a pretty robust list of companies that I would like to buy. And so if this volatility continues, or even if the markets remain flat, there are a lot of businesses I would like to own, and I'm in buying mode right now. I'm not pausing or delaying purchases, I'm accelerating purchases right now. And so this volatility is, for me, a buying opportunity. I am not oblivious to the risks. I'm evaluating the risks, and I'm looking at companies that are primarily going to be, because all companies are going to be impacted by what's going on in the markets. But I'm trying to separate those that are going to be temporarily impacted as a result of maybe an economic slowdown or a full on recession, versus companies that are going to be impacted longer term, companies that have supply chains that are at risk given the rising geopolitical tension that I don't think is going to end anytime soon. So I'm trying to discern the differences between those two temporarily impacted companies and companies that are going to be impacted longer term, and companies where the valuation has dropped enough where I feel it already incorporates the added risks as a result of the increasing geopolitical tension. I would certainly want to avoid companies that are heavily dependent on manufacturing inside of China, and companies that don't have the flexibility to adapt to that circumstance. So, if they have a strong manufacturing presence inside China where they don't have the flexibility to move some of that manufacturing elsewhere, I would be skeptical of those companies. I would be a little bit more cautious of those companies. One of the ones that I'm looking at specifically in that regard is Apple. Now, I own Apple stock. I've owned Apple stock for, I think, more than a decade now. And that's the one business that I'm considering selling of all of the stocks that I own is Apple. Now, I recently did a review of Apple and how it can potentially mitigate some of these risks in how it can, shift its manufacturing and send inventory to other areas. But I'm still not happy with Apple's prospects as a shareholder. This is a company that, if I didn't have a large capital gain embedded in Apple stock, I would have sold it already. But it's right at the margin where, if the price goes up a little bit more, um, I might consider it. So that's the business that is on my list of stocks to sell. Everything else that I own, I'm more interested in adding to those positions than I am in selling any of those positions. So I guess, to wrap this up, what I'm doing in this volatile time is looking to buy great businesses that are temporarily going to be impacted by these tariffs and increasing geopolitical tensions, and build up a portfolio of stocks at reasonably good valuations. And there are many that I think are really cheap valuations. And the added stock market volatility is creating an opportunity to buy some of these stocks at lower prices. And then on the other side, I'm especially aware and avoiding businesses that were boosted because of hype or enthusiasm, that are going to be significantly negatively impacted during these times. right? When there's a lot of enthusiasm in the market, these momentum stocks tend to perform really well. And then it reverses during these negative times when investors start to look for safety and quality and really look under the hood of these businesses and see if they have a viable business or if it's just hype. And so they start to sell some of those and start to move some of their assets towards more sustainable businesses that have great long term prospects and not just surviving because investors are giving them money. So that's kind of my thinking right now. I'm only thinking about selling maybe one of my stocks and thinking of adding to many, many others. And I wouldn't be surprised if you see me make some videos in the next few weeks about stocks that I've added during these sell off days in the market. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non subscribers. So if you prefer that benefit, please subscribe to the channel.